Good evening. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up, my first one in a couple of weeks. And it is Tuesday, and we're at the 28th of October, 2025. Now, we do get some reports tomorrow that you have to pay attention to. You got the Mortgage Bankers Association numbers coming out at 6 in the morning. You're going to get the National Association of Realtors this September. U.S. pending home sales data, that's going to come out at 9. The Federal Reserve, that's the report of the day at 1 o'clock, but it's a non-event. The Fed's going to come out with a 25 basis point cut, probably 99% probability of that. Could be a surprise always, but not what I'm looking for. The Fed will say they don't have a lot of data. What they do have shows that jobs are weakening, that inflation is sort of stable where it's at, so they're focused on that. The same story we've been getting. That's how I'm viewing it. You had the API petroleum stocks recaps all come out, and these were bullish numbers. The market didn't really react too much to them. And tomorrow at 9:30 in the morning, you're going to get the EIA number. Now, the big event of the week isn't tomorrow. It's on Thursday. How much and how far can President Trump get with President Xi to start burying the hatchet, to stop with them both going at each other and finding a way to coexist in a world? I don't know. I know that fentanyl is going to be on the table. They keep telling us that that's where they want to go. And if the Chinese will do things about that, the tariffs could come down. So maybe they can get the tariffs back to what other countries are at. But don't look for a big break. Don't look for all of a sudden China's going to say, we're coming in, we're dropping our other sources of soybeans, we're going to buy American beans, we're going to do this. Could it happen? As I just said, anything in life is possible. Probable? No, that's not what I'm looking for. So when I came and looked at the markets, and I've been looking at them now for the past couple of days as I'm off of some of the crazy drugs that they put you on for your back, and I'm hurting. There's no question about it, but I can deal with this now. I looked at the markets and I said, we've had this big run up. The market's already discounted to 25 basis points. So the event that you have to look for, in my opinion, what about China? What's that going to do? You also, if you're watching the market, what's going on? You're still getting the stocks like NVIDIA taking off to the upside. You're still getting the Teslas taking off. It's the same old game, and the other markets are not doing quite as well. If you look at RSP, the equal-weighted S&P, it didn't go up. It's hanging back here. Amazon is sitting in pretty good shape. We've gone down to the 11,000 area where you're trying to make something of a base to hold in Netflix at this point. So let's take a look at this, and I want you to start writing me again, what new stocks, ETFs, would you like me to cover? Don't give me things that nobody's ever heard of. I get so many people that will write. They want me to cover a dollar stock, $1.50. I have zero intent of doing that. It's got to be companies that make some sense, that have some price earnings, things of that nature that other people know. That's the purpose of this. So when we look at the PG&E Corporation, which is PCG, as you can see, all of a sudden the market had been running up, and suddenly you're starting to break down. Now, you had what's called an outside day down today, and that means you've got a pattern where you've got lower highs and lower lows. You took out the high and low of Monday. You closed on the bottom. So if you can take out today's high, either on Wednesday or Thursday, that'd be a good sign that there's not much downside. Not taking that out, though, gives you a different ball game. And since you're underneath the 18-day average when you did that, you've immediately opened the door up to go back to the 200-day average at 1573, which sort of ties in, if you take a look here, with the Bollinger Band at 1579. When we look at momentum, coming down. So going home, from my point of view, the pros are going to sell this market probably short. 1634 stops over today's high, hoping to get into that 1579 level. That's my guess. When we look at PDYN, which is Paladine Corp., which we had from last time, I'm covering a lot of the stocks that when I had to go in for my operation, I didn't finish up, so I wanted to do that. That's why I want you to write me what new ones you want me to replace. But lower highs, lower lows. You did hit the Bollinger Band 4 days ago. You've had a bounce. What turned out to be literally minor support at the 100-day average is now turned into resistance. Support closer to the 748 level, but you're very oversold. You're not embedded. So I think this has got to take another look-see. Dutch Brothers, you have your embedded reading. So this market on good pullbacks is a buy as long as the red line, which comes in here at 92.91, doesn't close back under the 79 level. Would I be telling you, hey, buy it up here? Well, no. I'd rather buy the breaks. If it keeps going up between the Bollinger Band and the 100-day average of 62.36, the green line, that's where I'm looking for the next resistance point. We then come up to Ensign Group, and this is another one that I want to drop, but it's done its job. This is healthcare. They provide the skilled nursing. I have a good friend that created one of these companies, I want to tell you, 25 years ago, and he supplied nurses all over Chicago. And then via that, he got into this crazy company called, LASIK for the eyes, made another killing with that. And I know something about this business via him. And I think we have been friends since we're 15 years old, 14, so it gives you an idea. But came up, still look for support. How could you not? I mean, this is a business that guys like me, older and so on, you're going to keep getting into this, and that's going to be the part of it. Netflix just literally fell apart. It based out for the longest time. I thought it was a base to go higher. It turned out to be a top that has carried the market lower. And that's what it is. You have a top. This is not a bullish market. This right now is in the bear camp, not the bull camp, any way that you want to look at it. Uber. I like what Uber's doing. I like the businesses it's going in. I like that it's going abroad, looking for other markets. I see support at the 100-day average. The 18-day average still looks to me supportive, momentum up. Yes, if you were to get back down here and start taking out 3 days ago low, maybe it's a little soon to come in. Barring that, if the market decides to go up, and remember, today's a failure day. You got as high as 97.73 and you gave back just about all that gain. That's not a good sign. So I think you're going to challenge the 18-day average. But if you can clear today's high, I think you open up the door for the 100 level again. Tesla, do you not see the sideways action that we have? You're overbought. You're in sideways action, void of a trend. The market is just spinning its wheel right now, but at a much higher level than it did prior to this, and that's a bullish, not a bearish sign. You'd have to get through this low to tell me, the market's wasted its upside momentum. Until that occurs, I'm still in the friendly camp. I'm waiting for Joby to drop back down. I think it can get back here possibly into the 1450 area and look for support. But once it gets back over this 18-day average of 1691, depending on how it gets there in terms of the news of the day, that could be important for this market. When we look at the financial service sector, okay, so the market fell apart while I was 10 days under the weather, came down, hit the Bollinger Band bottom, has bounced up, and so far that's what it is. It is a market, though, that's reestablished itself in terms of higher lows, higher highs, support coming in at the 18-day average of closes. I wouldn't give you 2 cents how it's going to react to the Fed tomorrow. Let's see what the Fed, we know what I think they're going to do. But what does the Fed chair say? What can he say? They don't have the data that they need to really make the projections that they want to make. They'll say that they have other sources. Of course, they're not going to tell you, we're blind, we can't run the country, we can't do our banking. They're never going to say that. But I think you realize that we're getting to the point where, no, they are running on hunches probably, with other private data that they have, but they are not operating anywhere near 100%. And sooner rather than later, we are going to get to the point where the American public tells Congress, We'll vote you out if you don't do something about what's going on right now. Neither side is right. They've got to get this government reopened and then open the talks. The Democrats are not going to force the Republicans. They don't have the power right here to do anything but that. They don't want to do it, fine. It will work against them. And it's not working for the Republicans either, because people that aren't getting their checks, all right, that have to decide, do I eat, do I pay the rent? Do you think that's right? This is America. This is not right. Higher lows, higher highs, huge reversal down in the industrial select, and you're overbought. This market's caught in a broad swath of just going back and forth right here, not giving the, it's a trader's market, not an investor's market right now, with the swings back and forth. If you're a $1, $2 trader, that's a good market to be playing with. In the energy select sector, you've fallen back right into the support. Now, you know what I've been telling you. The first thing that happens is when you put on these tariffs and you tell people you can't buy Russian oil, otherwise blah, blah, blah. Okay, so they have to run out and buy others, and they do things, and it drives the price. Then you realize that more oil can come about from your natural resources. The gold market. I read again today reports of people talking where they think gold will be the rest of this quarter as we end up the year. And there's a lot of people talking the 3,800 to 4,000 range. It probably makes sense. That's it. 4,400, too high unless some event happens that I don't see on the horizon. But without solving debt, next year, another move. You now have a near-term goal that you can go back up. A lot of people are saying, well, do I come into the miners yet? If gold's not good, the miners probably aren't good yet either. Then we get to companies like SoFi. This is trying to break out of the sideways action. Why? Holidays are coming up. People are going to start borrowing money to get their gifts and so on. I don't know what they'll spend this year, but this helps these type of companies. You're very overbought and over the Bollinger Band, but today was a wake-up signal that, no, don't get bearish on this, in my opinion. On pullbacks is when I'd want to take another hard look at it. At Palantir, you've come up to the upper Bollinger Band, you're overbought. There should be problems right here. I don't think you're going that far. Then we get over to BND. Well, why would you take this or TLT right in front of the Fed action tomorrow? Back away. Don't be a hero. Let the market see what comes up. It won't be what the Fed does. It'll be what the Fed chair says and the inflection points that the market reads from that. And always remember, when he comes out at 1:30 in Asia, people are sleeping, Europeans are out to dinner doing whatever, you go around. But I don't expect him to say anything to upset the markets right here. In the dollar, you've pulled back to the 18-day average, pretty much neutralized the uptrend, trying to figure out the next step. And you're trying to be bullish in the euro against the dollar, but you're right into the resistance here of the 100-day average and the 18-day average fighting themselves. So it's an interesting market, fun as can be. And here's what I look at. Once these two events are behind us, the FOMC meeting and whatever goes on with China, it's just like you've opened up the book. Now where do we go for the rest of the year? It gets exciting right here. If you want to keep up with things we do, you go to our website at iraepstein.com, go to the free offer section, choose the different things you want. There's a cursor right here. You'll see if you're watching me on YouTube, a little wheel, you click right there. It'll take you right to the site and away you go. I'm Ira. I've missed talking to all of you. I'm back. Each day it's better. I hurt, but each day it's better. You have yourself a great evening. Hope you watch the other videos, and I'll catch up with you tomorrow. I'm